So mostly founders are very much focused on product, distribution, marketing, and GTM. But the backbone of the company is the finance. Each penny matters, correct? And to manage those money, we need comprehensive knowledge, comprehensive ability to understand the analytical part of the finance. So over to you, Mr. Nihit.
Thank you, Jonty, for giving such a good introduction, and I'm delighted to be here. Also, I would add to one or two introduction lines about myself. So I'm basically CA Nihit Mehrotra, as Jonty rightly told you, and I've been into this industry for 7+ years now, and I'm helping startups raise funds, then helping them with valuations, financial modelings, and just to begin with, one of the biggest problems which I find with founders, with the new founders especially, is that they definitely know about the GTM, they definitely know about the product, but the thing they don't know about much is their margins sometimes, what ask they have to put before the investor, what are the drivers, what are the revenue drivers, the cost drivers, because most people think of valuation and financial models as just an Excel sheet which consists numbers. But just to be more mature about that, is that you should be knowing it's not a Excel sheet with just numbers. It's a judgment, basically. It's your business's economic value, which is with the investor, to which the investor will see and judge you on that. So people come to me and they say they don't have a revenue, and then they have a valuation of say 50 cr, 60 cr. So I'll just give you an example, is that there are one or two companies which have the same turnover but have different valuation numbers. So I'll help you identify the problem. Was that now a company doing 100 crore, another company also doing 100 crore, does not necessarily have the same valuation. One can have a valuation of 250 cr, and the other can have a valuation of 500 cr. So totally depends upon not only the Excel formulas, it depends upon what value your business is deriving out of your sector. Those companies might be in different sectors, might be in different business operations. The founders pedigree might be different. Everything lies in different. So could you people just poll up, like, how many people of you, I can see 30 34 people here, how many of you are founders and how many of you are just looking to have a knowledge session? So there are two aspects. You would think differently, those two people will think differently about that. So all right, so I've got
Yes.
racial automations as well. Okay. All right, so I've just got one
And
poll.
I think Nihit, people will keep telling them who are the founders and who are
Yeah,
just seeking knowledge here. So you can also react with thumbs up if you are a founder. So that
definitely. Yeah,
give a
definitely. That's
better
good.
idea.
That's,
So thank you so much. The chat box is
I can
flooding
see
with answers.
actively
And
replying. That's great.
Nihit, also I just want to understand before deep dive into your domain. I know you are so much enthusiastic about the numbers and the things, and you
Yeah,
are
yeah,
so excited to talk to with each and every founders here.
yeah.
But for me, being a design background and from the engineering background, I have always seen that for me finance is little bit difficult to understand. मैं पहले से ही बहुत ज्यादा ना मतलब I always be afraid about, oh wow, मतलब मैं इतना सारा चीज कैसे संभालूं and how I can identify the gaps and all. So can you just give me a sense of what finance is and how we can navigate who are not from that particular background?
So, Jonty, I'll tell you. See,
Yeah.
I know everybody has a CA on board, more or less. More or less, everybody either has a CA or either someone has a finance consultant on board. I'm not saying you need to be learning each and every concept of finance, but you should be at least knowledgeable of the the face pages. Like, you should be knowing what are your margins, what are your numbers, and eventually when you drive business as a founder. So you do not say like that, I'm not from the finance background, so I am not into finance. I might not be knowing that. Slowly and slowly, you would be able to know that these are my expenses, these are my revenues. In this way, I would drive more revenue. In this way, I would save more cost, right? So after a certain point of time, when you start learning on businesses, you get to know that, this is how I save cost. This is how I increase my revenue. So there are advisors on board. So, a person need not necessarily be a, master in finance to start a business. But eventually that comes with time, because obviously you might not have the time in the world to go through books and say, it feels interesting. The fat books of finance don't feel interesting. They are definitely
Absolutely.
monotonous at some point of
Absolutely.
time.
And Nihit, for me, to be honest, we are busy with a lot of things, right? We don't have so much time to focus on that particular part, but it is the backbone of the business. So
Yes.
just tell me, as if I'm not a non-finance guy and I have no background about the finance, but I'm a founder, right? So what are the three components I should look into, uh, at least quarter wise, or at least end of the day? I just check these three financial key metrics, and I just, okay, these are the healthy today, or maybe in once in a week I can check those metrics, and I'll say, yes, I'm a financially aware founder, not ki I don't know about my finance.
Right. So, Jonty, there are multiple things to look at, with regard to, difference in businesses, because every business sector has different metrics to look into.
Mhm.
Some might have a very, keen eye on the working capital part. Some might have on the penal part. But there's one thing which I would say you should be mugging up is your unit economics, and you should be monitoring it either on a weekly basis or a monthly basis, as in whenever you feel like a weekly basis would give you more, insights into what is happening inside your business. So you must be aware of your unit economics. What is your gross margin? What is your revenue? Did you achieve your targeted revenue which you were planning to achieve, right? And did you exceed the burn which you were planning a limit to? Suppose you planned a limit of 5 lakh rupees a week for burn if you are a big company. So is that not exceeding to 8 lakhs, 9 lakhs? Why is that? So, it's the basic thing which you should be asking your team as a founder. I should not be over exceeding my costs. I should be definitely exceeding the targets made by me for my revenue part. I should be knowing the gross margins, what I'm achieving, right? So all
Yes.
these things. So the main is the costing and budgetary part, which you should be keeping in mind for controlling. So these are
Got
two to three things which you definitely need to see on either on a weekly basis or a monthly basis, whatever it feels like, according to the requirements of your business.
And one more thing, Nihit. And
Yeah.
let's say I'm a pre-revenue startup, correct?
Okay.
So if anyone from pre-revenue startup, so is there any kind of a need of keep into a financial discipline? Because I don't have any revenue, right? But I'm burning some money from my founder's own fund, or maybe I have some grants, or maybe I have some things. So should I maintain the financial discipline or not?
Definitely, John T. See, today is the startup era, but what happened in the traditional business era? When there were no laptops and there was not a trend of maintaining everything in Excel. So, what did people do? What did our parents do? They wrote it on a piece of paper to understand. So, when they wrote it, it
Yeah.
in this era where there is so much of costing and finance talk about, you should definitely be pinning it down. What are your expenses? You need not necessarily derive your valuation yourself, but you should at least be disciplined about that. These are my expenses. This should be within this budget. Either write it on a, obviously it's a piece of paper is not a trend anymore. It's only Excel. Everybody has laptops. So you can at least maintain that there. Whether you are on a pre-revenue stage, whether you're on the later revenue. For the later revenue stage, the countings and all are in place. So they know through the MIs that this is happening. But for a pre-revenue startup also, you should be aware that, I'm spending this, in fact, you should be more aware and more alert that at this point of time many pre-revenue founders have limited funds. Should not be spending anything anywhere.
Got it. Got
Definitely.
it. Got it.
Yeah.
Thank you. Thank you so much. Till then, we have 38 people have joined us for this particular session. And I hope this session is going to be one of a kind, knowledgeable session, which is a practical based. So let me introduce the flow of the session will be
Yeah.
Mr. Nihit will not give any kind of, presentation or kind of a, presentation related knowledge to you. We will solve real time. We will do financial modeling real time. We will go through some kind of a model, how actual professional financial modeling structure looks like. How should we, approach on that particular part? So Mr. Nihit will, talk on that particular thing. And also we will take questions from our audience after the
Definitely.
practical knowledge session. So keep ready with your questions and we are coming soon to you. Till then, Nihit, please go ahead. And thank you so much for answering each of my questions.
Thank you, John T. Thank you so much.
Yeah.
So I'd like to start, by, but I've got a lot of replies with many people saying that those are people are founders. So they might be interested in this also. So, the first pain point I would say to, arrive at valuation or talking something technical about valuation is that you should be knowing your financial model. Now, your financial model is not just a profit and loss account, it's not just a cash flow statement or a balance sheet. The major things which build you up are your assumptions, right? What
Yeah.
assumptions are you having for your revenue part? What assumptions are you having for your cost structure? What assumptions would you be having for the indirect cost, the direct cost? What are your direct costs? What are your indirect costs? Right. So you should be first able to identify this. It's the AI era, so everybody is able to identify, but still AI also has a limited knowledge. It
Mhm.
writes below that AI can make mistakes. You see anything, you see
Yeah.
chat GPT or
Absolutely.
Claude, anything, it writes that below. And people often, what people do is that they do it a preparation from Claude or something, and then they end up answering nothing to the investor, right? So that creates a very, very big dilemma in the minds of investor. If you create anything from AI and you just put it without verifying it, if you verify it, then it's okay. So
Absolutely.
I have definitely seen people talk about financial modeling and everything, but I would definitely want to show you, it's not a presentation, it's just a basic structure of how the financial model looks like, what all you should have in the financial model to
Okay.
get it at least basically done in front of the investors. There are basic financial models, there are technical financial models also.
Okay.
It depends on investor to
What
investor.
are the difference between basic and technical?
Yeah. So basic financial model, your company might be in the pre-revenue stage. It might not have those that much technical adjustments, maybe, right? But in the later grown stage companies, which are definitely going for IPO valuation, which are done by merchant bankers, so there can be definitely technical things as well to show, right?
Okay.
So there are multiple methods for that, and those methods define the complexity. So you have like the most common method you have in places, that discounted cash flow method, which normally everyone uses, but
Mhm.
it's not much prevalent for the pre-revenue companies. It should be more prevalent for the companies which have already historical data in place, who are at least 2 to 3 years old, right? So that you
Got
have
it.
the historical data in hand. For the new companies, you can have any kind of the comparables method or the earnings capitalization method. You can just estimate the earnings of the next 5 years and get a apply a capitalization rate, and then you can arrive at the valuation. So I'll just show you one valuation structure which definitely would
That
help
would
you
be yeah,
people,
more right
right?
for
I'll
us.
just present
Yes.
my 3 months. So I think you'll be able to see this is a sample financial model of a e-commerce industry client, right? So I hope everybody is able to see my screen, right?
Yes, I think people just
Yeah,
I
yeah.
guess
If
until now, if you have understood all the things, so please keep reacting on the meet
Definitely, you can
so
make
that
this.
we can.
Let's make this session very interactive. You can ask questions in between as well. That's not an issue. I would be very
Absolutely.
happy to answer. Right. So
Absolutely.
basically, when when you start building a financial model, always remember, first of all, you will have to build up your assumptions. Right. Now, suppose,
Mihir, excuse
yeah,
me, sorry to interrupt. Can you just zoom a little bit because it is not visible in a proper way.
you wanted to zoom out or zoom in.
Zoom in, zoom in.
Sure. Is it visible now?
Um, I think it is visible now.
It is visible now, right? So
Yeah.
first of all, a person needs to decide for how many months. Is he preparing it on a quarterly basis? Does he want to prepare it on a monthly basis or a annual basis? Now, for the industries which have goods in hand, which have inventories in place, so it's better that they prepare it monthly, so that they are able to capture the inventory movement per
Mm.
month, right? You have the opening stock, closing stock, and everything, right? For a
Yeah.
service sector, you can do it anyways. You can do it monthly, you can do it quarterly, you can do it annually, right? So
Okay.
first of all, the foremost thing in a layman language, I would say, you need to define your revenue assumptions. Like
Okay.
suppose for this this startup which I'm showing you, it's e-com, not taking the name, it's a e-commerce marketplace startup for real estate people. You can hire an architect, contractor, interior designer on this
Hmm.
on this app. It's being developed right now, right? So the
Yeah.
thing is, you need, for suppose this, now you need to identify what are the number of contractors and builders, professionals which will be hired on this place. you know
Okay.
what is the incremental percentage you would be adopting per month, to understand what is the increase in the number, right?
Okay.
And then what are your numbers at the end of the month, right? So it is very, it's very, very visible for an investor to see.
Nihit, just a minute. I think we got a message on the chat box that
Okay.
your presentation is not visible to her. So is it for all or is it for
It
only?
is for all. It is for all, Janti, because I think many people might be able to see also. Might be some network issue. I'm not having any network issue for right now as well.
Vinayak is, giving a thumbs up that he can. It is visible. Okay, so
It is
people are
visible.
saying.
I think might be then one or two network issue hoga Janti.
Because also saying. Okay, perfect, perfect. So whatever you're presenting, so can you just zoom in a bit so that people can grab those
Yeah,
this
it's
is
already very much zoomed in, Janti. And I would just
yes.
increase the paint so that people are able to see.
Yeah. Now it is perfect. Now it is perfect. Okay.
Right. So for an e-commerce platform which is into marketplaces and everything, which is into marketplace for real estate consultants, so there are 2 to 3 things you need to identify very similarly. Now suppose you need to have the number of contractors, architects, interior designer, and furnishers and swimming pool makers, right? You have the number in hand. You did the incremental percentage in every month. How much are they going to increase by? Suppose we had 5 this month. Next time maybe we'll have 6. That would be a growth rate of around say 10%, right?
Mhm.
Then we need to identify what is the price per consultant we are charging for getting them onboarded, right? So
Okay.
it can be anything, it can be a subscription price. So why I have shown this financial model? Because this is a very basic and simple financial model, right? Which would definitely show simple. It's basically quantity into price. If you see revenue, it's quantity into price. So number of contractors into number of into the price per consultant, price per contractor. So that would arrive at the revenue from contractors and builders, right?
Yeah.
So this is one thing. I would show you the PNL also, the detailed PNL also, right? So if you have any questions on that, you can definitely ping me up. You can definitely have a message
Okay.
on the
So from audience, is there any doubt or questions you want to put on?
yeah,
So
you want
please
to put
just
on.
raise your hand. Yes. So anyone here?
So Jonty, I'm presenting my screen, so I'm not able to see if anyone is putting up. You can tell.
Yes. No. I'll assist you. I'll assist you. So
Okay.
yes, anyone, please come up. Is there any questions you have? You want to know more? I think Nihit.
Right.
So we got a question from Vinayak Jha.
Okay.
So he's
Yes,
asking,
please.
in assumptions, what all things more we need to write?
All right. So Vinayak, for the assumptions part, you need to break each and everything as much as you can. Suppose you are selling a product, right? And you suppose you have a earphone in hand. You have just created a earphone like boat, and now you have 100 units of that in place, right? So what you can do, you need to write each and everything, the number of units you would be selling this month, the price per unit. You can say it's 899 or 999, whatever it feels, whatever you keep the price at, and
Yeah.
then you'll arrive at the revenue, which is very simple, which is almost
So we got,
89,900.
so we
Now,
all.
now for everything, you need to have an incremental factor as well. Suppose you
Mhm.
said you'll sell 100 units this month. You might, you might take a factor which is relevant with the industry. You can take an increment factor of 5%, and then you can say, my definitely units would rise by 5%, right? So that could be 105. You can keep the price as well, or you can decide that after a year or so you would increase the price from this much percentage. So that percentage has to be seen in context of the industry, whatever the industry demands. Suppose it's suppose in this industry it's a price increment of say 5%. So what you can do is that you can take a price after a year. After a year, if you want to change, that would be around 943. You can keep it as 944. Right? So this way you have to present each and everything written. You can't just write, revenue from operations 100 into 899. For the assumption sheet, you should be having each and everything clearly in place so that the
Mhm.
investor is able to identify what a number of units you are selling, number of incremental percentage what you are using, whether this is aligned with the industry norms or not. Now, if you say I'll take a unit percentage of 40%, right? So that might seem unrealistic, right? Because you just sold 100, maybe you can sell up to 40% of the increased value, but you'll have to give proper assumptions. What are the revenue drivers which will help you achieve 40%,
Hmm. Okay,
right?
so
You need to
only
have
I
performance
think
marketing in place.
Nihit, I think Vinayak is on a mic. So yes, Vinayak, if you have any questions, so please.
To
Yeah,
ask
sure.
a only revenue that we need to focus on, or we need to include the expenses too? Like mine is a tech company, so I have infra cost and also the expenses. Should I include what I'm assuming for 2 years and all? Or-
Definitely. So Vinayak, this is what I have just explained is of the revenue part, right? I was just coming down to expenses, if you can see here, right? So
Okay.
that we would come, just from the top line till the bottom line,
Yeah.
right? So I show
And
you the PNL. How does it work out?
Nihit, before going to the panel, we have few more questions on the chat box.
Sure,
So
please.
from our team, someone is asking, Nihit, for the advanced stage businesses, could you cover the important matrices to track and
Which
where
for
downfalls
which
happens mostly?
businesses? For which businesses?
For advanced stage businesses. For
Advanced.
advanced stage businesses, could you cover the important matrices to track and where downfall happens mostly?
The which industry was it asking? Was it that person asking for?
So maybe it is a open-ended questions. So I think this is different for different
So this is
industries.
different for definitely different for different businesses. You should be tracking some, I'll tell you. Once you become to the unit economics, right? You should be tracking definitely CM1, CM2. That is a basic thing. Apart from that, the metrics differ from business to business. In some businesses with huge debt, you can have interest service coverage ratio. You can have debt service coverage ratio. You can have asset to sale ratio. Even for the working capital to sales ratio, right? You can track delta of change in working capital. The working capital this year minus the working capital last year. That differs from business to business. In a business which is not having debt, which is not heavily relied on debt, you can definitely track the basic metrics, the asset to sale ratio. You can track the revenue receivable cycle, the payable cycle accordingly, right? So this differs from business to business. Now I'll give you an example for the EV business. For a company which is into fleets. So I had one or more companies under me which is giving fleets to Blinkit, Zomato, Zepto,
Okay.
for getting them on lease, right? So what they do is that they procure the vehicles, the two-wheeler vehicles, the electric vehicles on loan, on debt from banks, and then they give it to these companies and they get a lease rent in return.
Mhm.
Right. For those companies, it's important to track internet ISCR ratio, DSCR ratio, their burn, their customer acquisition cost. So all these things are there. That differs from company to
Okay,
company.
got it.
Yeah.
Got it. So I think Dhrumil, we will take your questions after some time. So late Nihit, I think cover all the things which he's presenting us. So yes, Nihit. So please
Correct.
continue with your presentation
Yeah.
first.
So one more advisory I would like to put up: when you prepare a financial model, do not just prepare an Excel saying this multiplies by this is my revenue, right? Now
Yeah.
there are two opinions in mind. I'll get to the later part. I'll just sum up. Whenever you start a startup, suppose you're a D2C brand, right? Now you said I have 15 SKUs. SKUs are basically stock keeping units. You have, suppose for electrical company, you have earphones, you have watches, you have music systems, then you have something or the other in the electric gadgets, right? So you
Mhm.
need to decide whether you want to become a brand or whether you want to become a store, right?
Okay.
So whenever you start a startup, you build a model, try keeping as less SKUs as possible, because that will help you gain more investment in the market. If you keep 100 of SKUs and your revenue is just coming from one or two SKUs, investor might not invest in you, saying that you are not a brand, you're just a store. Because both started with earphones only, right? Ultimately they ended up building all these watches and everything, right? So it's important for you to build a financial model not with just a mind of clicking Excel formulas and sheets. You need to have a consultant or an advisory mind in your a founder mind in your head. The founder mind thinks, how many SKUs do I have, what all would be required to sell those, all these things in it. So remember these one or two points. I would give a summary to John also. He can share it with you in the groups later on.
Absolutely, absolutely.
Sure. So coming to the expenses part, you need to understand what are direct expenses, what are indirect expenses, right? Suppose for a e-marketplace, suppose like for Amazon, right? Now for the direct expenses are definitely those from which, without incurring which, you cannot earn revenue, right? Suppose you are selling, definitely you are selling all the products through your e-marketplace. It's generally
Yeah.
e-marketplace. You need to have a person in tech who would manage your softwares. You need to have direct, order packaging cost would be there. Then definitely you would be a processing, order processing cost. Any person who would be setting up to assist in the order processing, the logistics part. So that differs from business to business. Your direct expenses, some businesses might have tech cost as direct expenses,
Mhm.
some might not have, some might have tech cost as indirect expenses. So
Okay.
here it is a e-marketplace for real estate people. They are definitely having the tech cost as direct expenses, right? Because without these, they cannot fulfill an order. Without cloud hosting, nobody would come to your website and say, all right, fine, I'm going to hire a professional or
Mhm.
place an order, right? So those are
Absolutely.
direct expenses.
Yeah.
Now the salaries and marketing are indirect expenses. For some startups, it might be direct expense. For some
Mhm.
startups, it might be indirect expense.
Okay.
So, yeah. So this is how it differs from business to business, right? For the business selling goods, the COGS, the cost of goods sold, including the raw material, the labor cost incurred to produce that material, and the direct expenses. Those are the direct costs.
Okay.
Right? That differs from business to business. And in a goods definitely industry, we say it's COGS, cost of goods sold. So revenue minus cost of goods sold, that helps you arrive at the gross margin, right?
Mhm. Mhm.
So for the service industry, revenue minus direct expenses helps you arrive at the gross margin. I'll show you a sample PNL also, which you people definitely would want to learn in hand, so that you have the right. This is the most important thing which an investor would definitely want you to learn. Even if I think some of you people might have seen Shark Tank as well. So
Yeah.
they ask you, what is your revenue for the next 3 years? What is the revenue for the next 6 months? What is the revenue for the last month? So I always advise people to prepare 60-month, or even monthly. It can be for 24 months as well. To prepare a monthly model, so at least the 6 months revenue, next 6 months, what you are going to do in the next 6 months, right? So you have a picture in hand, right? So that is why we prepare financial models for monthly basis. That is much more appropriate. The more clearer you are, it's going to definitely help you out, right?
Yeah.
Hi, I have a question.
Yeah,
Since
sure.
you were
Yes.
asking about direct and indirect expenses, so I just wanted to understand, since my business is a very early stage and we are hiring lot, we are not employing per se anyone right now, but we are, kind of going lean by having consultants who are a little professional, deliver some chunk of work, and then we get commercialized in that way. So, do those consultants will be booked as a direct cost to us, or?
Yeah. So I'll tell you, you'll not use the nomenclature as consultants in direct cost. You'll use the nomenclature as salaries and wages. So there are there can be two types of salaries. For that, you need to have a schedule in hand, salary schedule in hand, for which you would have a department by schedule, which would present every department, whatever salary you are having, what are the employee count you will be having, right? So that is how we. So what the salaries for, some can be direct salaries, some can be indirect salaries. For example, this model, the tech team is generally into the direct salaries part, because without them, because the major of the revenue which is coming with the help of a tech team which is managing how to close up revenue, close up
Even
sales.
they are consultants, like they are not
Even
employees.
if they are consultants, even if you have if you have consultants on board, you must be having a contract with it does not depend on whether those are consultants or in-house people. It depends whether are you using those direct expenses to incur revenue. You need to identify as a situation whether without those people would you be able to earn any revenue. If you're able to earn any revenue without those people, definitely it can be into indirect expenses, but it is mandatory to complete your transaction. Without those people, it cannot be completed. Then it's going to be a part of direct expenses,
Got it. Got it. This is good.
right?
Also, does this model kind of not fly off when we talk about investments, like taking investments from VCs, or is there anything problematic in this model, or because we are dependent on consultants and not our in-house employees? So
So for that, we need to identify the case. We need to identify what all that startup is doing, right? For now, you're asking a question relating to finance. So for an investment decision, it definitely need to identify what the startup is actually doing. Without that, it's a little
sure,
difficult to do that, right?
sure, sure.
Right. So, coming to the expenses part also, you can have as many expenses in your business. Some businesses might have different expenses, some might have any other different expenses. So what we can do is that the major part is the revenue part, which you need to identify, but also the expenses parts. Also, suppose your gross margin is increasing, right? So now as a founder, you need to have in hand what all factors or what cost assumptions you would be using so that your gross margin increases. Investors focus particularly more and more on gross margins. That is a very good metric which you should definitely be learning about. Suppose for an import export company which is importing any products from, say, China, right? Now their gross margin is, say, 50 to 55%, considering the high logistics cost. Now they decided to manufacture, assemble everything in house. So definitely that would help them increase the gross margin, right? So you have the cost driver, the cost assumption. In a very layman language, I'm telling you, you need to have a cost assumption, cost drivers, which would help you increase your margins later, right? So it's not just a piece of paper that you multiply A by B and you get a gross margin. You need to have proper justifications for that, right? Also, for the indirect part, there's one more thing which I would definitely take you up to, right? So the marketing part, right? Now for the marketing part, there are one or two metrics which you need to remember, which is basically the return on ad spends. Now suppose you spent 100 rupees on marketing, right? And you got a revenue of 400. So your your return on ad spends, ROAS, which is also called as ROAS, is almost 4, right? So the industry multiple of ROAS also, it depends on industry to industry, howsoever you want to, the similar companies are achieving it, right? So you need to have a ROAS. So you need to show the investor that this is one, this is what where I would be playing up, right? For the marketing part, if you have a very less ROAS, say 1 or 2, and it constantly goes out to 1 or 2 only, that might definitely not be a very green flag for the investor to invest in you. So you need to have proper assumptions. What marketing would you adopt? Would you adapt this performance marketing? Would you adapt platform marketing? Any other marketing through meta ads, influencer marketing, right? So that also depends on business to business. Depends on business to, for a D2C brand, definitely on Instagram, Facebook, social media would attract more customers, right? And that might not be the case exactly for an e-commerce brand. That can be a little different, right? So those are also one of the metrics you need to remember. At the same time, when you put up marketing expense, your financial model should state what is your cost of acquisition, like cost of acquisition for client. The CAC, which is known as the CAC in general language people talk about, right? So you need to identify that if I do a marketing of 500, I would attract this much customers in a year, right? So every time when you attract new customers, you need to judge, you need to identify what is your customer acquisition cost. If your customer acquisition costs are increasing day by day, and you're not getting those much customers, then definitely your model will hurt. It would not be a very good startup for the investor to invest, right? So you need to identify how can you bring down your CAC, what marketing you need to do, and maximum of it at the pre-revenue stage. It depends on the founder also, because the investors at the pre-revenue stage definitely invest in not exactly your valuation, but more on you and how much do you know your metrics about, right? So
Okay.
those are there. Those are need to be understood, right? Then
Yes.
apart from that, there are general expenses only. You would have a legal compliance people on board. You would have who will also calculate whatever duties and taxes, whatever the GST compliances and all you have in place. So the maximum would be those expenses. Then also you need to identify the most important, one of the most important expenses, which is high for maximum of businesses, is salary and employee increment, right? So you need to have a schedule, which I showed you earlier also. Wherever you have a month on month schedule, you can have a year on year schedule as well, but I prefer it month wise, so I have prepared it month wise. Whatever or what all departments you have, the number of employees in each department, and an average total salary which you are paying to your department, right? And what is the incremental factor you would be giving to the employees? What are the increments you will be giving? By how much your employees would be rising? See, for achieving a revenue of 100 crores and more, you can't just have 5 employees on board, right? Practically, there might be one or two exceptional startups I'm not talking about, but generally you need to have a growth factor every year, that whenever I get the investment, I would be putting it to acquire these much of employees, right? So it's there. All right. So these are one of the things. Also, you need to have, I'll come to the capex part after this. You need to have payable and receivable days as well. So payable days are basically in how many days do you pay to your vendors, you pay to your creditors, you pay to your all the subscription if you're paying anything. If you're for a good startup, if he's paying to the vendors for raw materials, the labors for expenses, right?
Okay.
For the receivable days, for a prepaid model, here it is 0 because the subscription model is on the advanced model. So it is a 0 receivable cycle. Otherwise, it differs from startups to startup. You can have for 10, 15. Maximum payable days should always be 45 because the MSME Act prescribes beyond 45 days. If you delay, you will have an interest on the in the expense which that would be disallowed, and there would be an interest component on that, right? So
Okay.
apart from that, one of the most important things is capex part. Now you need to identify what all capital expenditure, your computers, servers. If you have a virtual office, you might not need the office equipment in hand, but if you have a physical office, definitely you would be requiring some tangible assets. Some startups are into agriculture, so they might be having land
Nihit,
also.
sorry to interrupt you here. So can you just explain me in very simple word what capex actually is?
So capex is basically, assets are basically those from which you are taking help to derive your revenue, right? So those are there. So suppose for a manufacturing company, you have some machines in hand which are making your product, right? For a
Yes.
D2C manufacturing company. So those are fixed assets, right?
Hmm.
For anything which is on a recurring basis, you are expending it regularly, that will form part of the profit and loss account. But for anything which is helping you derive revenue over several years, is basically fixed asset, which is also known as capex.
Which means in a very simple line, I have paid once for that particular asset, and it is giving me the return for the years of years.
Years of years.
Yeah.
Now suppose laptop.
Yeah.
Laptop have a fixed life, not a fixed life, you can say it for 5 years generally, right? So you
Yes.
don't buy a laptop every day. You buy a laptop once and then you use it to, work on it. And then with the help of that, suppose for my consultancy also, I use a laptop and I work on it day and night basis, and I deliver the deliverables to client. So that is a fixed asset for me. That's not a stock. Anything, if now someone is a person who is dealing in plant and machinery, is basically not using capex, right? Suppose if I sell only plant and machinery for D2C startups to just selling the machinery, and they would make something on it and sell it off. If I'm a trader into all this, then it's not a part of capex. But if I'm a business which is into say D2C manufacturing, and then I purchase a machinery for production and all that, that is capex. Right? So that's a difference between capex. Right. So assets may be of two types. They can be tangible, they can be intangible. For the tangible part, it's basically definitely the assets which you can see, which are computers, can be servers, can be networking equipment in this case. Then if you have a conference room, equipment can be there, right? If you have a physical office, you might be having table, chairs. So all those are fixed assets, right? For the intangible assets, those are basically research and development things. You have a website, you have a mobile app development, you have an admin panel, CRM. So those are intangible assets, right? And there's a difference between the two. For the tangible assets, they are generally depreciated. So for the intangible assets, they are generally amortized, right? It's kind of a similar thing, but there's a difference. Amortization is done with intangible assets, but depreciation is for the tangible assets, right? So you need to also have the correct nomenclature in the financial model. You cannot just write anything for anyone.
Yeah. So Nihit, जो आपने बोला भी amortization and depreciation. So on a very layman terms, can you just explain for our audience ki what is amortization and what is depreciation, and why it is putting it in those particular expenses which you are saying?
Right. So basically, that is what I told John, the layman language only. The depreciation is basically, it is a wear and tear of the assets over a period of time. Suppose you buy a car, right? You have a depreciation on that. So the value is getting declined day by day. So that is depreciation, right? Amortization is basically for the intangible assets, where the value of the intangible assets, say website, or say basically mobile app development, or anything,
Yeah.
that also have, you charge a particular amount to your PNL each and every year, which is also more or less same as depreciation, but since it's intangible assets, it is known as amortization also.
Got it.
No,
Got it.
amortization. Yeah. So
Okay.
that's basically that only. So in a layman language, you need to have all these things in the financial model clubbed at one place with proper assumptions, and then you can arrive at, a PNL or a balance sheet. So at the last, you need to have a balance sheet in hand. You need to make sure your cash balances are positive. Whatever loans are there, it is coming in your books. Whatever assets are there, whatever share capital you have put in, whatever reserves and surplus are coming from the P&L account. So those are everything linked. You cannot have hard pasted figures from anywhere. Make sure when you prepare a financial model, you get it prepared. Figures are linked from one place to the other, so that if anyone wants to reach from A to B, he can reach it. He can see what assumptions you have put in, right?
Yeah.
Also, need to have a cash flow statement in hand, which is definitely, if you take help of anyone, he'll definitely give you that. And there's one more thing, is that if your working capital delta, now suppose you have a working capital of 100 this time, right? And the next year you had a working capital of 80. So the delta becomes a negative part. So many people think it is a negative change in working capital. So, oh no, my financial model is this, it's showing a negative impact. So it's not like that for a working capital. If it is showing a negative amount per year, the delta in working capital, that means your cash is freeing up and your valuation would rise. If it is a change in working capital which is positive, then you have more cash stuck in. So when you have more cash stuck in, your valuation will decrease, right?
Yes.
Also, whenever you prepare the financial model, post that you need to have the most prominent method of financial modeling, which is DCF. This is basically prevalent for the industries which are already generating revenue, or which have been there in the which have some record. There might be some companies for the past 2 years which have generated zero revenue, right? So again, DCF might not be appropriate, but for the companies which have generated some revenue, those have some data in hand, DCF is the most prominent method. You can also use earnings capitalization method, which I will show you. Method. You can have n number of methods. For the fintechs, there is cross dispersal method. For the US startups which we have valued together, there are Barkus method. There are n number of methods of valuation. So the most commonly used is DCF. It is sometimes used for the pre-revenue companies also, where I'll tell you. Suppose your company is generating a revenue of exactly zero, nothing, right? But you have pipelines in hand, say 20 CR.
Okay.
So I did a valuation for a IoT company, which I would not name. It has got funding from Startup India as well. Plus, they've got investor round of 2 CR as well. So they were pre-revenue, but they had pipelines in hand, for 20 crore from say discoms and everything. So they also adopted DCF. Investors advised us to adopt DCF so that they're able to get the future cash flows in hand, right? So what is DCF? DCF is basically discounted cash flow method. So what do? You arrive at a free cash flow formula from the P&L you have created, and then you discount it per year with a discounting factor, and then you arrive at a complete valuation after that. And the discounting factor you definitely get from the equity model valuation, which is basically cost. You need to have a cost of equity. If there is debt in your business, you need to also have debt cost of debt also, and then you can arrive at a method, a rate for which you will be using it to arrive at the valuation part. So these are all, these are definitely a little complicated, not very complicated for the consultants, but might be a little complicated for the founders, right? Because these are a little technical calculations, but some of founders are aware also, because if they have gone through the past valuations, if somebody is qualified up to that level, so they know how it is going, right? So one of the most important terms you need to also know is the weighted average cost of capital. Right. So what is this? This is basically nothing but the cost of equity plus the cost of debt. So the cost of, I'll just give you a very layman example, because otherwise it would be a very technical thing. So the cost of debt is basically the rate of debt. Suppose you've got a debt on 15%, right? So the cost of debt can be 15%. Also, if you, for the equity, cost of equity, which is also known as KE, you need to have a capital asset pricing model valuation kind of something. This rate, this is also known as risk-free return and market rate of return formula. So where you also need to have each and every sources for these numbers, right? So I'll tell you also in detail once John Teague allows me that much of time to do, right?
Okay.
So then suppose you arrived at a cost of equity of say 14%, right?
Mhm.
Now your debt is say 1 lakh, your equity is say 1 lakh only, right? Or say
Mhm.
maybe 2 lakhs. So the total of equity and debt goes out to be 2 plus 3. It's 3 lakhs, right? So what you can do is that you can put, you need to just proportionate it. You need to just proportionate it by saying, the cost of debt divided by the total funds you have in hand, and then multiplying it by the rate. So I know that can be a little technical on the part, but
Yeah.
understand it on a layman language. It's just the cost of equity and cost of debt. However, maximum businesses don't have the cost of debt, so you need to, so the cost of
Yes.
equity would do, right?
Yes.
So you can have that model over there. So everything is linked here. Also for the, while calculating, whenever somebody does your valuation, I'm not saying you need to learn the formula. Whatever you need to see is that whether he has adopted each and every rate with correct sources. Suppose for the risk-free return, it should be, the Government of India bonds,
Yeah.
rate, which you'll get from the RBI side. For the market rate of return, this can be the Nifty 50 compound annual growth rate, right? For the
Okay.
beta, there is definitely sheets available in the data available from reliable sources. You can see industry averages here. So you can put anything, you can select the beta from here sector wise, right?
So,
And
Nihit,
yeah,
here I just want to say is since you have told us that when you are doing this stuff, it should be you should link A to B point very well, so that if anyone scrutinize your financial model, so they should get the all the crux of your numbers. So yes, it is derived from a particular sources and
first,
it is genuine, and also the industry standards should be followed. Now tell
right.
me, if someone messed up with this kind of a stuff. I haven't, linked all the A to B points, B to C connectors in a well, thought manner. Or if I have missed the industry standard, which is, readily available, the data in the market, we haven't followed that. So what will be the risk factor or the consequences of those kind of actions, which maybe, comes on founder's shoulder, and founders can have to pay hefty amount of kind of money or hefty kind of
Yeah,
stress to get out
understand.
of this particular situation.
So,
So what?
Jonty, this often happens. I encounter it on a, almost say a daily basis only. Founders come up with the financial model. Their numbers are not linked, or if their numbers are there, those are not justified. Those are not there with valid assumptions, and they are just built on a vague basis, a haze basis. They thought of certain. What do certain founders do is that they think of certain number, that
Mhm.
if I started a business after 5 years, I would definitely be at, say 200 crores, 300 crores, but they are not valid assumptions for that. So once you build the Excel, if you don't have anything linked, then
Mhm.
definitely that financial model is not accepted. You need to have it definitely linked in hand, right? Either
Yes.
you are able to explain each and everything, but still then also for the due diligence, when the investor would do a due diligence, he would definitely want a sheet to be prepared, which is professional, not
Perfect.
just an
Perfect.
ideal sheet, right? Yeah.
So on that note, I got a question from Dhrumil. So yeah, Dhrumil, are you here with us? So just say hi.
Yeah,
I
hi.
don't. Yeah,
Yeah.
hi, Bataiye.
Hello, hello. Hi, Mr. Dhrumal. So you have put your questions on the chat. I think, is this founder-made Excel should be audited by any third party or not required? If yes, which are those third parties for audit purpose? Can our CA audit the same?
So I'll tell you, Dhumil,
Yes.
there are one or two things I would want you to be, be aware of, and this is for every founder. So there are professions in the market, CA, CS, CWA, who do valuations, but everybody is not a registered valuer. So what you need to keep in mind is that any person, any person can do a valuation, but a registered valuer valuation report is the one which is accepted by the investor. So even if you get it prepared from someone who's not a registered valuer, you have to take it to someone who's a registered valuer. He would see whether whatever you have done, whatever assumptions you have used, are they on track or not, right? So without that, if you see ki, all right, my CA would do evaluation, my CS would do evaluation, right? So that might be correct to some extent, but there might be some metrics which a registered valuer knows. Not every professional would know that, right? I, being a chartered accountant, is also advising you, whenever you go for a person with valuation, you can go with or either he has a registered valuer team inside, in-house. Then also it's okay, yeah. So there are many firms who are definitely not registered valuers, but they are doing valuation very nicely. Plus, they are getting it, verified by a registered valuer. So it's not that you directly need to go to a registered valuer. You can go to any CA, CS, CWA, whatever, whosoever you like. But you need to instruct that person that yes, he should get it at least verified by a registered valuer, right? So the registered valuer is the one who is also registered with the Insolvency and Bankruptcy Board of India. So they have certain, number which is generated uh, when they qualify this exam, right? So this is a person who also, for the companies which are going for IPOs, they have merchant bankers. So the merchant banker valuation is required in that case. There are certain limits for that, right? So the registered valuer is one. For now, for the revenue the earlier stages, you need to have a registered valuer in hand who is registered with the Insolvency and Bankruptcy Board of India, who would sign the report lately. Even if you're reaching out to your CA this year, that's not an issue, but you need to tell them that I just want it from a registered valuer so that it is accepted by the investor. That's it.
Yes. So, Mr. Dhrumil, any follow-up questions on that?
No, thanks a lot. Thank you very much.
Okay.
Yeah, thank you. So we have another question from Lokesh.
All right.
What does intern stipend counted as? Is it a direct cost or not?
So again, I would like to tell Lokesh is that I think I answered this earlier as well. It depends. If you are, if without those interns, you're not able to achieve revenue, those can be classified as direct costs. It's definitely on the founder to some extent, but that should also be justified. If you are putting all the salaries in the direct cost, which are not necessary to derive revenue, then definitely it can be a wrong concept to apply it. But you need to identify again according to the business of the startup. Some might be into AI, some might be into deep tech, some might be into e-commerce, then D2C, agri, anything. So that solely depends upon how do you identify the business, right? So that is there.
Absolutely. And we got one more questions from Dhibot AI. So
Okay.
the team member from Dhibot AI is here with us. If yes, so please unmute yourself and say hi. Hello. I think okay. So the question is, for a deep tech hardware plus AI startup with a working prototype but no revenue yet, what milestone should I complete before approaching angel investors or VCs?
All right. So definitely it's important to develop an MVP, and you definitely need to have the product market fit, which is the PMF, if you call in short, in hand to see whether it works or not. You might think your PMF would be very, very good, but might be in the industry there are certain big competitors who would jump onto you as soon as you take that product on a big scale, right? So for that you need to identify that, but also the finance part you need to have in hand. I'm not saying it should be very detailed at that point of time since you've only developed the MVP, but yes, if you make a plan, then definitely that's not a bad, right? You do not if you do not lose anything by making a plan, so it's better you can do it.
Absolutely. So yes, I think we will take a few more questions from the audience.
Sure.
So now, anything else from Nihit from your end you want to say to the audience?
No, I think I've explained a lot, and I suppose the founders must have written down also one or two things they might have thought about.
Absolutely.
Yeah, I'm ready for the questions. Yeah, I would be very glad.
Perfect. So before taking the questions, there are a lot of things we have learned today from you. So if you want to summarize something for the easy crafts, so can you just give us a summarization of what you have told in a just very brief manner, so that people just got remembered each and everything. Then we will move forward with the questioning from
Yeah.
audience.
So for the founders, what I would say is that first of all, you need to have in place your assumptions for revenue, expenses, each and everything. And secondly, you need to mug up your unit economics, right? You need to have in hand that this is my gross margin, this is my net margin, this is my CM1, contribution margin 1, this is my cost of acquisition. I'm not saying you should prepare, you should be very strong on preparing in Excel, but at least you should come to know the basic metrics. What margins I'm generating, what is my customer acquisition cost, and once you remember all these things, so whenever at every point of time you take another step for your business, you remember in mind that I have a CAC in mind, यार मेरी CAC तो 500 है, 510 नहीं होनी चाहिए यार, 520 नहीं जानी चाहिए, it should not go 520, क्या ये करने से 520 हो जाएगी क्या? So that वो mentality फिर shifts from this to this, यहाँ से यहाँ पहुंच जाती है mentality.
Absolutely.
The great founders.
Absolutely. So Mr. Srikanth, are you here?
Yes, sir.
Yes. So please go forward with your questions.
Sir, I'm a solo founder in the robotics domain. So yes, I have my MVP and things like I have almost 30 lakhs in my account. I can do things, but in future I need to approach VC. But I don't want to have a co-founder. So how this thing actually works in the market?
So Srikanth, एक तो सबसे बड़ी mentality, if you are comfortable in Hindi, I'll speak in English, is that you whenever you start a business, right? At the very first point, even if you start solely, then it's okay. But after a certain point of time, that is what, when I was going through the financial model for the salary schedule, I told you cannot achieve big revenues just by working solely, right? You need to have a team. There are one or two startups which I saw in the Shark Tank. Yes, I saw in the Shark Tank, for which the founders are doing maximum of the things alone, but the investor rejected him because he does not have a team. Now, suppose you want to go from 100 crores to 500 crores. Can you do it all alone? Will you be able to manage the marketing, finance, salaries, tech, and every coordinating with vendors, day-to-day operations on a solely with? So you need to have a co-founder who would be supervising the team. So at this point of time, it's okay that you started with a solo, but when you develop an MVP, you want to grow, you want to scale faster, you need to have a co-founder.
Yeah,
So
okay.
better to have
So like better to have during the early stage, like I'll be giving him the shares. So what after I have to give the first I have to look for the co-founder.
So Srikanth, that depends. For now, if you're building a AI robotics, I'm not exactly sure what you're building in robotics. So usually the tech startups have one or more co-founders. Definitely, it's not only one founder in place, right? It's not only one founder in place. For after a certain point of time, you need a co-founder. So that is what I'm saying. I'm telling you, you might not need a co-founder right now, but after a month or say 6 months, 8 months, when you will see operations growing, you would definitely require that. You would require that.
Thank you.
Yeah. So thank you so much, Nate, I think, for that explanation. And Srikanth, have you got your answer?
Yes.
Okay, perfect. So anyone else from the audience, just raise your hand and then unmute one by one. We will take your questions. So please come up with your questions. Yes, thank you so much, Aziz. Yes, Aziz, please unmute yourself.
Yeah, thank you, sir, for the session. Sir, I am from real estate industry. So I have an asset and I want to know how to prepare a balance sheet, profit and loss, and calculate my profit every month, sir.
So Ashish, in order to prepare a balance sheet and profit and loss, you need to have compiled your sales. You need to have a compilation of whatever purchases you have done. I'm not sure what business are you into. So that definitely, you're into real estate, right?
Yeah, it is a real estate asset. I just create that asset and give it on rent. That is that.
So rental income is your sales income.
Yeah.
But for that, just to answer that, somebody who would deep dive in your business, for example, a CEO or someone, or a professional, any professional, it would be, he would be able to identify more, right? Because obviously that in finance, there are judgments, more than. So on a call, somebody can't tell you in a minute that, how can you prepare a balance sheet or P&L. I can show you a structure, what can be there, but it definitely depends on business to business. For example, you said rent. So rental income can be one of this. Now we have to identify what expenses do you incur. So you need all the bills for that. Then you need to bill, account it in your books of accounts. You need
Yeah.
to record your liabilities. You need to record your expenses, and then go on to
Yes.
do that.
So what
Shivam,
we can suggest you, Aziz. So you can book a one-on-one call with CA Lohit Mehrotra.
yeah.
So I think on that one-on-one call, it would be more apt for you that you can disclose your बिल्कुल जो भी आपको बताना है and whatever matrices you have, whatever bills and all that company stuffs you can present him so that he can guide you in a better way. So our team will guide you here.
Shivam wants to ask something.
Yeah, Shivam.
हाँ जी
Go ahead.
शिवम बताइए.
For example, I'm starting a company. So for pitching it to the investors, we are in the MVP mode. For pitching it to the investors, how could we value our company? What will be the valuation of our company?
So the valuation of the company will definitely depend. That is what I told. If you're at the pre-revenue stage, you need to identify either if any of the big competitors are there, so you can identify it based on the competitors. Whatever their metrics are, then you can use a multiple to value yourself. Or at last, you can also use use the DCF method if you know that you have decided what price you will be selling whatever you're wanting to sell. You know what are the expenses. You can draft a P&L and you can tell it through a DCF method as well. But what the investors do, I'll tell you everyone, is that if suppose from the DCF valuation is coming to 50 crores, now from the earnings capitalization method is coming to 15 crores, and with the net present value method is coming to 21 crores. So what the investors do, they do not give you the highest valuation, they just take an average and give you the average valuation so that they get it at a discount. So you can use different methods based on your assumption, based on your case studies. If you have in pipeline that I am selling this much things to this much people and these people are already there in the pipeline, you can use the DCF method.
But seeing the competitor who are already earning in crores, how can we measure our way of valuation since they are already established? For example, I'm starting an acceleration school. My competitors are Mesa and all. So how can I measure that according to their competencies?
So Shivam, that is based on the multiple method. Now you must be having their details, right? What are the revenue they are generating, an approx figure, what is the EBITDA they are generating. So what you can do is that you can take out a multiple. That is basically the comparables method also. It's also known as the precedent transaction analysis method, where you take out the multiples on enterprise value by EBITDA or enterprise value by revenue. Then you apply it to your revenue, right? So there's a technical method where you take out the median figure as well for 4 to 5 competitors, and then you apply that median figure to your revenue and EBITDA. So we can discuss it once, after this call or something. And I can definitely explain you.
So Nihit,
Thank you.
yeah, thank you so much, Shivam, for asking the questions. So Nihit, can you just guide the audience ki how they can connect you before this call on that particular group?
Yeah. So basically, they can definitely connect me through this, I think, YZ community as well. John D knows me. You can connect me on LinkedIn. You can connect me on WhatsApp, anywhere you feel like. So that's it. I think LinkedIn and WhatsApp are the most common things which people connect on. I think Shweta wants to ask some questions.
Yes. Shweta ji, please.
Your session was really very good and helpful. Actually, I'm a medtech founder. I'm developing a medtech based device. So मेरा question ये है कि जैसे मुझे भी मैं यूनिट इकोनॉमिक्स कैसे निकालूं? अभी तो मेरा जैसे POC डेवलपमेंट स्टेज पे है, वो चल रहा है, POC बना भी नहीं है, इट इज ऑन गोइंग, पर हमें कहीं भी पिच करना होता है तो हमें उन्हें यूनिट इकोनॉमिक्स बताना होता है, या फिर कुछ भी कैलकुलेट करने के लिए आगे हमें अपना यूनिट इकोनॉमिक्स पता होना चाहिए. तो सर आई एम वेरी कंफ्यूज्ड कि मैं उसको कैसे निकालूं, लाइक उसका कुछ फॉर्मूला या समथिंग.
So it's not about कि मैंने वही बोला था एकदम शुरू के सेशन में, मैंने बोला था कि it's not just a Excel game of numbers. वो एक जजमेंट का खेल होता है पूरा, राइट? Which you are valuing the economic value of your business. तो मेरा ये कहना है कि अगर आपने नहीं भी बनाया है तो you must have created a business plan also. आजकल लोग ChatGPT से ऐसे होता है ना, बिजनेस प्लान निकाल लेते हैं कि ये होगा, तो उन्हें आइडिया मिल जाता है कि मैं
हाँ।
यहाँ से ये हो सकता है, इन डिटेल तो नहीं कर सकता वो, बट आपको ब्रॉड मोटा मोटा एक आइडिया दे सकता है। कहीं से तो आप अपने प्रोडक्ट बना रहे हो, कहीं तो आपके मन में ये चीज होगी कि मैं इसको इतने में बेचना चाहूंगी, और
हाँ,
इतने में
हाँ,
मेरा इतनी यूनिट तो मैं बेच ही लूंगी क्योंकि मेरे कॉम्पिटिटर्स भी इतना बेच लेते हैं। कहीं से
हाँ,
कुछ डेटा यू विल डिराइव, तो
हाँ,
यू कैन मेक इट ऑन दी अजम्पशन बेसिस कि यार मैं 10 यूनिट तो इस मशीन की बेची दूंगी, उसका प्राइस 100 होगा, मेरे को मालूम चल गया कि भाई पर यूनिट प्राइस कितना है, तो मेरा टॉप लाइन आ गई। फिर उसको बनाने में क्या खर्चा लगेगा। इसीलिए बिजनेस स्टार्ट करने से पहले ना लोग एक जब प्लान जो बोलते हैं बनाने को, इसीलिए बोलते हैं सो दैट यू गेट अ प्लान दैट ये मेरी कॉस्टिंग आएगी, ये रेवेन्यू। लास्ट में कोई जब बिजनेस स्टार्ट करता है इंडिया में तो क्या बोलता है कि भाई कितना खर्चा लगेगा ये पता नहीं है, राइट। तो वही
हाँ,
यू मेक आउट अ बिजनेस प्लान कि ये रेवेन्यू है, ये ग्रॉस, ये मेरी कॉस्टिंग आएगी बनाने में, इतने मुझे लोग रखने पड़ेंगे, इतने के मैं मेटा एड्स चला लूंगा, और इतने के मैं भाई मार्केटिंग बाहर से कर लूंगा, इतना मैं यहाँ से प्रोडक्ट सोर्स कर लूंगा। वही कंपाइल होके आपकी यूनिट इकोनॉमीज बनती है। पर यूनिट इकोनॉमीज मतलब यूनिट।
हाँ। ओके, सो इसमें से इंफ्रास्ट्रक्चर वगैरह जो लोग वर्क कर रहे हैं उनका पर आवर बेसिस ये सब भी इंक्लूड होता है ना?
डेफिनेटली, सो एवरीथिंग डिफर्स। अब आपने मान लो कोई जगह ले ली काम करने के लिए, तो डेफिनेटली वो ऑफिस आपने रेंट पे लिया तो आपके रेंट एक्सपेंसेस आएंगे। देन सपोज करो आपके रेंट एक्सपेंसेस है 50,000 रुपए महीना, आप हर महीने नियम से 100 यूनिट बनाते हो, तो योर रेंट एक्सपेंस पर यूनिट फॉर ए यूनिट इकोनॉमिक्स इज व्हाट 50,000 डिवाइड बाय 100।
हाँ, करेक्ट।
इस तरह से यू डिराइव ऑन केस टू। मैं हमने आपको एक एग्जांपल दिया है, वो फिर डिफर करेगा बिजनेस टू बिजनेस।
ओके, ओके,
So,
थैंक यू।
so like प्राइसिंग कर्व या कुछ पैरामीटर्स वैसे अगर वगैरह कुछ इस टाइप के हैं क्या, जिसके बेसिस पे अपन ये कर सकें। क्योंकि क्या है ना, जैसे आप बताया कि हाँ ठीक है अपन ऑफिस स्पेस लिए हुए हैं, लेबर है, ठीक है। तो अब क्या है कि लेबर का जो है पर मंथ 5,000 या 10,000 पर लेबर अपन हमारा कॉस्टिंग जा रहा है। 4 या 5 लेबर लगेंगे, ठीक है, ये तो अपना फिक्स्ड है। रेंट अपना फिक्स्ड है। इलेक्ट्रिक कॉस्ट, इलेक्ट्रिसिटी कॉस्ट थोड़ा बहुत वेरिएबल, ठीक है, ये भी फिक्स्ड है। बट अब क्या है कि ट्रांसपोर्ट का अपना जो है कुछ मतलब अता पता नहीं है, ठीक है। दूसरी बात की परचेजिंग अपन करते हैं तो वो भी वेरिएशन आता है कि एक बॉक्स लेते हैं तो कुछ अलग कॉस्ट आया, फिर या फिर 5 बॉक्स रॉ मटेरियल्स लिए तो अलग कॉस्टिंग आ गया। अब ये सब कैलकुलेशंस वगैरह करके, अब दूसरी बात ये है कि ठीक है अपन प्रोडक्ट बना लिए, अपन एक एवरेज कर लेते हैं कि हाँ सामने वाला का इतना कॉस्ट है। तो अब चूंकि क्या है कि सामने वाला लार्ज स्केल पे कर रहा है तो उसका अलग ये जा रहा है, ठीक है। अपन छोटे स्केल पे कर रहे हैं तो अपना कॉस्टिंग ज्यादा आ रहा है। अब अपन उसके बेसिस पे अपना प्राइसिंग करते हैं तो भी इशू है। अब क्या है कि स्टार्टिंग में जो है अपना 2 या 3 ही प्रोडक्ट बिके, या 10-12 प्रोडक्ट ही बिके, ठीक है। अब धीरे धीरे जैसे जैसे ये होगा, मार्केटिंग होगा, तो हो सके कि छठे या 7वें महीने में अपना मतलब एक पूरा बॉक्स बिकता है, या 100 या 1000 यूनिट्स बिक रहा है, ठीक है। तो ये क्या टाइमलाइन को लेकर के, जैसे अपन 1 साल का कंसीडर करके उसके हिसाब से डिवाइड कर दें, या 3 साल का लेकर के डिवाइड करना होता है, या 6 महीने का कि हाँ भाई 6 महीने का अपन करते हैं और उसको पार्ट कर देते हैं कि हाँ पर प्रोडक्ट इतना। तो मतलब ये बहुत दिक्कत होता है ये। हाँ
नहीं तो आलोक वही चीज है ना कि दैट इज वाई लोग व्हाई डू पीपल गो टू प्रोफेशनल्स। फिर वो रीजन वही है ना कि अभी मैंने उनको श्वेता को भी यही बोला, आपका जब बिजनेस प्लान बनेगा ना तो जो चीज आप अभी मुझे बता रहे हो ना, ये चीज आप आइडेंटिफाई करके डालोगे। क्या मेरा कॉम्पिटिटर इतने में मान लो 600 रुपए उसको यूनिट कॉस्ट पड़ती है, यार मैं तो बहुत छोटे स्केल पे कर रहा हूँ। आपने मार्केट एक्सप्लोर करी, 4 जगह से कोटेशन ली, हो सकता है आपको वो प्रोडक्ट पड़ा 800 रुपए का, राइट। तो आपके हाथ पे कोई पेपर तो आ ही गया ना कि भाई मुझे तो 800 का पड़ने वाला है, तो नाउ यू नो कि मेरा एक्सपेंस 800 है, ठीक है। तो सिनेरियोस तो बहुत हैं, जो सबसे मोस्ट अप्रोप्रिएट सिनेरियो है वो उठा लो आप। समझ रहे हो आपने
हाँ
4
समझ रहे हैं, बताइए।
presentation ली, किसी ने कहा सर मैं 500 में दूंगा, किसी ने कहा 600 में दूंगा, 700 में दूंगा, तो डेफिनेटली यू वुड वांट ये 500 है। अब अगर 500 वाला ये बोलता है कि सर मैं तो गुजरात में हूँ, आप दिल्ली में हो, आपकी लॉजिस्टिक 200 रुपए लगेगी, तो नहीं जाओगे ना आप उसके साथ। फिर आप वही उस 600 वाले को चुनोगे जो आपके घर के पास में या फिर आपके ऑफिस के पास में। तो वो केस सिनेरियोस आप किसी के साथ बैठ के, को फाउंडर के साथ बैठ के आप आइडेंटिफाई करते हो कि सर मेरा 4 जगह ये दिमाग लग रहा है, ये 4 सिनेरियो है। फिर वो आपको हेल्प करता है कि सर यहाँ कॉस्टिंग कम आएगी, यहाँ से उठा लो, बस।
Absolutely.
अच्छा, किसी ने
Thank
पूछा
you.
यार
Got it.
DHI
Yes,
what AI, एक फाउंडर की, अरे चला गया वो मैसेज।
and yeah, Vinayak Jha, I think हम एक बार उनका भी क्वेश्चन लेते हैं। तो Vinayak, are you
हाँ,
with us? Yeah.
बताओ भाई बताओ।
Yes, yes.
Hello. Yes,
Yeah,
Vinayak.
yeah.
So please आप
Yeah,
अपना ही
so
क्वेश्चन प्लीज पूछिए।
yeah, basically, मोटा-मोटी answer मिल गया, but I wanted to ask that for my tech app, like how do I calculate my unit economics? Like I will be earning through subscriptions by the users who take. So
ठीक है,
what all things should I include in my cost? Should I only include the infra and the server cost, or all the salaries and hardware and every cost that is
हाँ, तो विनय
incurred to me?
मैं समझ गया। सब्सक्रिप्शन पे दे रहे हो ना, जब आप
Right.
सब्सक्रिप्शन पे देते हो आप डिफाइन करते हो नंबर ऑफ यूजर्स कितने हैं। अब मेरे को ध्यान से सुनना, आपने वेबसाइट बनाई, ठीक है, सब हो गया रेडी है सब कुछ, अब आपके यूजर्स आना शुरू हो गए, 100 लोग आए वेबसाइट पे, ठीक है, और यार 20 चले गए, तो नाउ यू नो कि आपका चर्न कितना है, 20%, ठीक है।
Okay.
तो वहां आपको डिफाइन करना है कि यार मेरे इतने यूजर्स बचे हुए थे, 80 बचे ना, इन 80 से मैंने कितना कमाया। तो सपोज वो रेवेन्यू आपने लिया 1 लाख, अब 1 लाख डिवाइड बाय 80 जो भी आता है वो आपका पर जो भी यूनिट प्राइस है, या फिर जो आपका सब्सक्रिप्शन है, तो एक बंदे को सब्सक्रिप्शन 500 में बेचोगे तो 500 आपका यूनिट सब्सक्रिप्शन हो गया रेवेन्यू, राइट। अगेन दैट डिपेंड्स ऑन केस टू केस की बिजनेस, आपके सब्सक्रिप्शन बिजनेस ही बहुत टाइप का होता है ना यार। मैं किसी सॉफ्टवेयर का सब्सक्रिप्शन ले रहा हूँ, मैं किसी सर्विस का सब्सक्रिप्शन ले रहा हूँ, अर्बन क्लैब से ले रहा हूँ कि स्नैपडिट से ले रहा हूँ, तो उस तरह से अलग होता है। बट आपको डिफाइन कैसे करना है, सब्सक्रिप्शन मॉडल में नंबर ऑफ यूजर्स डिफाइन किया करो। मैं स्नैपडिट के साथ अभी एक बार मैं बैठा था मीटिंग में, तो मैंने उनकी थोड़ा सा यूनिट इकोनॉमिक्स रिव्यू करी, वो नंबर ऑफ यूजर्स पे डिफाइन होता है कि भाई हमने इतने सब्सक्रिप्शन बेचा, हमने 99 का सब्सक्रिप्शन बेचा, तो कितने लोग, मतलब कितने लोग आ गए उसमें, ठीक है, तो वही चीज है, वो नंबर ऑफ यूजर्स पे है।
Got it. Got it. Thank you.
Yes.
हाँ,
Yes, and we got a questions from Mona ji, Mona Dalvi. So yes, if you are with us here, Mona ji, please unmute yourself and
Yeah, hi.
ask your questions.
या हाय मोना।
Yeah. So we're creating a product where we are the first in the market. And
Okay.
so there are assumptions that are only going to come from my unit cost. Like what is my cost of manufacturing? But the projection for an investor, how do you bridge that gap? Because then that is just an assumption. Like for example, I'm in the home appliance space. So any other appliance, you generally have a data. So many users, this is the graph. First year, you had only 5% onboarding. Second year, 10%. That way, there's no graph for me per se. So then it is just purely, and how do I then kind of create valuation beyond my actual cost?
अंडरस्टूड। सो मोना, मैं उस टाइम भी, अभी शायद 1-2 लोगों ने और पूछा था, मैंने उनको यही बताया था कि जब आप एक बिजनेस प्लान बनाते हो, अगेन रीइटरेटिंग, तो आप कहीं तो डिफाइन करते हो ना कि मैं अपना प्रोडक्ट बना रहे हो, इतने में मुझे बेचना है, और इसको बनाने में इतनी कॉस्टिंग आएगी। वही एज सिंपल एज दैट फॉर प्री रेवेन्यू स्टार्टअप, तो और ही सिंपल है। तो इन्वेस्टर क्या गैप देगा वो नहीं है, वो अपना क्वेश्चन पूछेगा, आपको जस्टिफाइड आंसर देना है। हो सकता है वो ये थॉट प्रोसेस से सोचे कि वो आप बी आंसर दोगे, बट आपका आंसर ए है, और अगर आप अपना ए जस्टिफाई कर ले रहे हो, देन उसके बी से फर्क नहीं पड़ता, आपने अपना आंसर जस्टिफाई किया।
So I don't need to worry too much as to what I'm giving in projections of sales.
हाँ, तो अब ऐसा होता है ना, मान लो मैंने कोई नया बिजनेस स्टार्ट किया, मैं बना के अपना अजम्पशन निकल गया, या तो मैं यही डरूं कि इन्वेस्टर मुझे ये पूछ लेगा, मुझे ये पूछ लेगा, उसमें ये दिक्कत है, और व्हाट आई डू इज दैट कि मुझे कुछ 2-3 इन्वेस्टर्स के पास में गया, उन्होंने मुझे फीडबैक दे दिया कि सर आपके मॉडल में तो ये कमी है, ये कर सकते हो, ये कर सकते हो, तो दैट वे यू स्टार्ट बिल्डिंग अप, राइट, दैट इज वे यू बिल्ड अप।
Absolutely.
हाँ, अभी किसका और क्वेश्चन है, विकास, आई थिंक
Yes, Mr. Vikas is raising hand from a long time.
विकास भाई, विकास आप पूछ लीजिए।
Yeah, Nick, so I have a couple of questions. When you say unit economics, right? Let it be a tangible product or an intangible product like enterprise software, whatever it is, right?
Okay.
So now your customers acquisition costs will involve the marketing expenses predominantly when it comes to CAC, customer acquisition costs, right? So in the unit economics, if should we include the CAC in our plan, or whenever we pitch it to investors? Or should we keep it separate and then shout out in the meeting saying like the CAC is part of unit economics? Question number one. And I have one more thing. I'll just finish it up. So the other thing is, in the early stage startup, let's say if I'm building a enterprise software, a SaaS platform, right? So in the enterprise software, the early CAC will be on the higher side, right? It's really difficult to define the
Definitely.
CAC because I don't know where my customers will be coming in. Should it be through LinkedIn? Should I burn on LinkedIn campaigns or Meta campaigns? Or should I do a DoorDash, which is very difficult to define on the day one, precisely on the enterprise software, based on my little experience before. So would like to know how do we model that in the finances so that we can, when we pitch it to the VCs, the early stage companies, how do we justify those numbers?
So because that depends on business to business, but आपका customer acquisition cost will definitely be part of the cost ही है ना आपकी, तो यूनिट इकोनॉमिक्स में तो आएगी आएगी. सो आप
Correct.
देखो कभी कदार जो बड़े इन्वेस्टर्स पूछते भी है वो ऐसे ही पूछते हैं भी हमें टॉप लाइन से एकदम बॉटम तक बता दो आप, तो उसमें आप कैक माइनस करते ही हो, राइट. अब आप जस्टिफाई कैसे करोगे, बात कैसे करोगे, वो आपको ये डिफाइन करना पड़ेगा. मेरी बात ध्यान से सुनना आप, मैंने आपको फिर बोला आपका SaaS प्लेटफॉर्म है, आपके पास नंबर ऑफ यूजर्स होते होंगे ना हर महीने कि हाँ, तो आज आपने किया 500 रुपए का मार्केटिंग, इस महीने आए 10 लोग, वो 10 लोग रिटेन हो गए. नेक्स्ट मंथ आपके पास आए 5 लोग और टोटल हो गए 15. तो आपने कितने की मार्केटिंग करके 5 लोग लेके आए आप, वो आपकी कैक को डिफाइन करेगा. आप समझ रहे हो, आपने 100 रुपए स्पेंड किया और कम से कम 1000 लोग आ गए, ठीक है, 1000 लोग आ गए आपके प्लेटफॉर्म पे, 10 की कॉस्ट एक्विजिशन हो गई आपकी, कॉस्ट ऑफ एक्विजिशन, तो यू डेफिनेटली डिडक्टेड फ्रॉम द यूनिट इकोनॉमिक्स.
So the retention we should not be considering in the CAC.
नहीं, रिटेंशन यू शुड नहीं, रिटेंशन आपके नए यूजर्स कितने आए वो है ना. फिर आपने यूजर आपने क्या किया, कस्टमर एक्विजिशन कॉस्ट, एक्वायर कितना किया है आपने. अब एक्वायर करके रिटेन कर लिया वो तो फिर आपका अलग एक कॉन्सेप्ट हो गया, बट वो आपका एक रहेगा कि आप हर महीने कितने यूजर्स लेके आ रहे हो.
सही है. Understood. Thank you.
Anything else?
yeah.
अभी है.
Yes, I think team wise I think Ridhima is here. So yes, Ridhima, do you have any question?
हाँ, अभी पूछ लो कुछ.
I just wanted to request that if we can keep it in English also, because some people are
Alright.
not comfortable in English
Okay,
and they are not understanding Hindi.
So we'll keep in English only. हाँ, ठीक है.
Yeah, I think yes. So yeah, Ridhima, I think do you have any questions or any doubt? You can ask also. Correct. So
Yeah,
other
I
than
think
that,
there are a couple more questions from our
Sure.
audience itself in the chat box. We can take them
okay.
from the both AI.
Okay. So from Vibhoti, I think are you here?
क्वेश्चन पूछा. It's asked a very good question. एक फाउंडर की सबसे बड़ी, what is the biggest mistake, financial mistake a founder does?
Should avoid.
You should be avoiding is spending like anything, spending like Vijay Mallya or something. So that is, one of the biggest problems is not budgeting. On a very serious note, you need to
Yes.
budget out. These are my expenses. I should not be going beyond it, right? If I go into the detail, there are a number of answers to this. The biggest thing is you should definitely, I'm not saying to you to be a conjuice or something, but you should plan your finances wisely. You should know how to spend, where to spend more and more. Consult people. Do not spend that right away, right?
Yeah.
Because sometimes people spend on the wrong person, and I have seen startups pay huge amounts of financial model, get nothing in return, get a AI generated financial model, and then they are not able to answer investors, right? So you need to plan and spend wisely, because obviously there's no reason at the last where, founders come up to me saying, oh, I spent that much on this thing, and I didn't know that this person was this, and I spent a lot of this. So that's your fault. You, even if you're new to industry, you should keep advisor. Why do people keep advisors on board? This is the reason, because you have someone to ask, who's the right person who would work for you.
Yeah, absolutely.
Exactly.
And
So-
yeah,
One question.
Yes, Shrikant.
yes, sure.
So right now, if I'm building my startup in my home, and I have a co-founder, like if he demands for 50% of equity, and like if this is the situation, so in future, like I have built the company on my own land, then after, who will be the owner of that land? Like it gets into the company's thing, or like it will be I'll be the owner of it. So because I got this doubt as how the founder also gets a salary from the company, like he's not allowed to have the whole company funds as a founder.
Srikanth,
yeah.
before I answer you, you ask this question anyone, so anyone will first ask you, how are you giving 50% to someone? Do you know your valuation? What is your valuation, and what valuation are you giving that 50%? Does in the agreement I'll tell you, that's a very good question you asked. Many founders do not build the founders agreement. Even they just register their company and say, my company is registered, my partner is holding 41%, I am holding 59%, and that's done. You need to have a founder agreement in place to see that in very, very, very much detail, that after this point of time, this thing will happen, this transaction will happen, and you would be a part of the company or not. So that is all defined in the founders agreement. You need to have in between. But for a technical part, I can answer is, for defining the ownership, a person should have more than 50% equity stake in the company. So that is definitely defined by the valuations also, which you put up, at what person you are diluting, you are giving 10%, 5%, 50% to someone, solely depends on the valuation. Somebody should come up and say, there's a trend of advisory equity these days in the company, which is 1 or 2% or 3%. That is fine. But there also you determine a little bit of a valuation, that this is the valuation I'm giving. And after 4 to 5 years, whenever this person exists, I will have to give this valuation back to him.
Okay. Fine, understood. And also, can you recommend any books to understand this financial thing? Like, I'm from the engineering background, I don't have this thing till in my mind. So if you can refer any books,
So see, I'll tell you, for valuation, it's not an easy task. You need to have the principles of accounting in place. That is why you hire a professional for that, right? Now, I have seen hundreds of financial models which do not have the deferred tax adjustment. So that's a technical adjustment. For the assets you have in hand, for the fixed assets you have in hand, you need to have 2 depreciation clauses. One is with the Income Tax Act, one is with the Companies Act. You need to prepare the fixed asset register for that. I'm just giving an example. You need to have the fixed asset register for that. Or if you are giving some employee benefits, some ESOPs, so you need to have the timing differences in hand, which is a technical concept to build a good financial model, right? So you can study books, you can go definitely, 1 or 2 courses you can go for, but it's better you go with the professionals, so that it's aligned in place. Because when you build a business, you need to have a unit economics, everything in hand, but you might not have that much time in the world to build a financial model. Read a book, understand it, consult someone, and then build a financial model, something you might not have the time for.
Understood. Yeah, thank you.
Somebody has asked, my startup falls into, Jonty, just 1 minute. Somebody has asked, sorry, I'm taking your time, I have not seen the time. My startup falls into the AI plus engineering plus hardware category. For initial customers and funding, it would be wise to first target government projects or private enterprise clients. It depends on what you are building. The hardware category, whatever you are building, suppose you're building some defense material, right? So definitely you would want the government to be involved in that. You would try your level best to sell it to the government. Now it depends on whatever. You can always go for government tenders and see, whether it, or if you have some connects in hand for the government part, when you want to go for government projects, 8 out of 10 cases require you to be a little sourceful, and you need to know someone in the government part so that you can expedite your project. Otherwise, the private enterprise clients are definitely available for you in the market.
Yeah. I think we are a little bit in the extra time. Yeah. So yes, I hope you guys have a wonderful knowledge session with CA Neet Mehrotra. Thank you so much, Neet, for coming with us and
for inviting and
yeah, thank you so much. And yes, so today we have learned about finance and the core about the finance, and I think a lot of doubts, lot of questions, and you may connect with Mr. Nihit after this particular call. We have shared his contact and the LinkedIn on our chatbot. Just connect with him, and if you want to recognize, just take him that you got the reference from Baizi. I think Nihit will recognize you from this particular session, and it will it will be helpful for you. So there are a lot of founders who are right now in the ideation stage, or maybe you have the MVP ready, or maybe you have some traction in your hand, right? So you can also book the customer room session like this, where if you want to validate your idea, or you want to get some potential customers for your beta testing or the product. So you can book our Wisely customer room session, and where you can directly talk to your potential customer like this. And yeah, I think on the chat box we have also shared that particular thing. You can DM us and we can talk further.
You can
for your
connect
thing.
on LinkedIn, WhatsApp.
Yeah.
So the Easy community will give you all the connects.
Absolutely, absolutely. Because
this was a very interactive session, and I love it particularly. Yeah.
Absolutely, absolutely. And here we are because we always try to do something real thing, not just the knowledge session or the presentation or nothing. You should get some kind of a substantial knowledge out of it,
Yes.
which you can apply in your real life. Correct. So
Right.
that's how Nihit has presented all his knowledge to you. And also you can have this particular session like Nihit, you can have with us through the customer room session. So you can book it now. Other than that, yes, Nihit. So if you want to conclude this particular session with some notes, that would be great. And after that, I
Yeah.
will conclude this session.
Yeah. So basically, all the founders who are here, अभी कुछ चले भी गए हैं. So the founders here, you need to definitely, you can't do everything at one place yourself. So you need to hire a team who would help you. You can always have advisors on board, but it's important to know your finance part as well. So that is all what I would want to end the session with. Any help, anything you need from, I am always available on LinkedIn, on WhatsApp. You can definitely take help of.
Absolutely, absolutely. Once again, thank you so much, Nihit, for joining us. And thank you so much, our lovely audience, for being patient with us till now. And have a lovely weekend ahead. And yeah, thank you so much.
Okay, thank you.
Thank you.
Thank you, Auntie. Thank you, Team Baiji.
Yes, yes. Thank you so much.
Thank you, team. Thank you, Nihit.
Thank you.
Good weekend.
Thank you, Vikashji. Thank you, Alakji. Thank you, each and everyone. Yeah.
All right. Thank you.
Yeah. Perfect.